Today, we are diving deep into a fascinating and entirely fictional analysis that paints a picture of a world right on the edge of chaos. Now, even though this is all hypothetical, the way it connects huge geopolitical shocks to the markets, well, it is really thought-provoking. So let's get right into it.
All right, so the report drops us right onto a very specific day, March 2nd, 2026. This is our ground zero. It's the exact moment when the world's financial and geopolitical systems hit what the analysis calls a structural rupture.
So what causes this massive rupture? Well, according to this analysis, it's two huge events that happen at the exact same time. First, you've got a geopolitical shock. A military operation called Epic Fury kicks off in the Middle East, and boom, a massive energy crisis. At the same time, there's a tech shock. The US government suddenly bans the use of a leading AI platform, Anthropic, for national security reasons. The report says it's this 1-2 punch, this combination of two unrelated shocks, that really sets off the domino effect.
To really wrap our heads around this complex forecast, we're going to break it down into 5 key parts. We'll start with the immediate chaos of March 2026. Then we'll look at this idea of a great AI divide. Then we'll check out how global markets split apart, then see what the new geopolitical map looks like through currencies, and finally, we'll cover the report's big strategic outlook.
Okay, first up, a world completely shaken. So how do you even begin to make sense of this kind of chaos? Well, the report builds its case using a few key theories, and it starts with a big one from the legendary investor George Soros.
That theory is called reflexivity. And put simply, it just means that our beliefs, our biases about the market, they don't just reflect what's happening, they actually create what's happening. It's not a mirror, it's more like a feedback loop that can just spiral and spiral. And the report gives us a perfect example of this in action. Okay, step 1. The fear of war in the Middle East makes traders freak out and bid up the price of oil. Step 2. That higher oil price isn't just a number on a screen. It makes it more expensive in the real world to ship things, to make things, which creates actual inflation. You see? The fear literally becomes the reality. That is a reflexive loop.
But look, this isn't just some philosophical idea. It is backed up by some seriously heavy-duty math. Now, you can totally ignore the complex formula you see here. The real takeaway from the report's models is this. The insane price swings, the extreme volatility, it's not just a temporary panic. It's a structural feature of the market for the rest of 2026. This is the new normal.
Now, let's move on to our second section and see how this all builds into one of the report's boldest predictions, what it calls the Great AI Divide. The analysis basically argues that the AI boom as we've known it, it's over. It's not dying, no, but it's splitting into two completely different stories. So why the split? It all starts with that government ban. The report brings up this idea of institutional tail risk. What does that mean? It means that suddenly the rock-solid assumption that a big government contract is a sure thing, it's gone. A political decision can just wipe out your entire business model overnight. It's like finding out the foundation of your house can just be legally removed without any warning.
And this risk, according to the report's models, is absolutely devastating for AI software and application companies. The analysis gives an 85% probability of a bubble collapse for these guys. All that venture capital money that was pouring in is expected to just dry up because investors are terrified of this new, totally unpredictable risk.
This slide really breaks down the two completely opposite fates. On one side, you have AI software and models. The report says they now face extractive control, where the government can basically just take away their value whenever it wants. So money flees. But on the other side, you have AI hardware. You know, the chips, the data centers, the power grids. That stuff becomes a sovereign necessity. It's treated like critical national infrastructure, like highways or aircraft carriers.
And the result? All that money running away from the software side has to go somewhere, right? The report argues it floods into hardware and infrastructure. In fact, its models predict a mind-blowing 92% probability of a massive boom for the companies building the physical stuff behind AI. It's a total reversal of fortunes.
This whole theme of a great split, it doesn't just apply to AI. It extends to the entire global economy. So, in this third section, we're going to see how the report predicts a world of really clear winners and losers, where these twin shocks create completely different futures for different countries.
First up, the United States. The report basically predicts the US becomes a black hole for global capital. Money from all over the world just flees to the perceived safety of the dollar. And as you can see from the targets, the analysis is projecting rising stock prices driven by defense and that AI hardware boom, along with soaring prices for energy and gold.
Okay, now contrast that with the outlook for Europe and the UK. It is a completely different picture, and it is grim. The report points to their heavy dependence on imported energy, especially natural gas, as a fatal weakness. With gas prices expected to basically double, the analysis forecasts a really bad recession and pretty big downturns for the major European stock markets.
The forecast for Asia is a bit more complicated. The report suggests China could actually find a relative advantage here, using its political ties to get cheap oil from Russia and Iran, which would cushion its economy and maybe even boost its stock market. South Korea, though, is caught in a brutal tug-of-war. Its world-class semiconductor industry is booming thanks to AI hardware, but it's also a huge energy importer, which is a massive headwind. The result? Just extreme volatility.
All right, let's move to our fourth section. We're going to look at how all these economic shifts completely redraw the geopolitical map. And according to the report, the clearest way to see this new map is by looking at the currency markets.
The main idea here is something called the dollar smile. Basically, in times of global crisis, capital just rushes to the US dollar for safety, which makes it get way stronger. The report forecasts the euro falling toward a 1-to-1 exchange rate with the dollar, and the Japanese yen, which gets crushed because Japan is 90% dependent on Middle Eastern oil, is seen weakening dramatically.
So, what does this all add up to? In our final section, we're going to look at the report's big conclusion, where it lays out a very specific strategic framework for how one might navigate this crazy, hypothetical world of 2026.
The report's conclusions are really direct. It suggests a strategy of selling software and platform stocks while buying into physical AI infrastructure. It advocates for owning hard assets like gold, oil, and copper as a hedge against inflation. And geographically, it says to favor US assets over those in Europe and Japan. And it just hammers home that high volatility is here to stay. Of course, it is super important to remember this is the report's fictional analysis. It's not any kind of financial advice.
And here is the report's powerful final thought. It argues that this whole thing, it's not just a market downturn. No, it's a historical turning point. It's the beginning of a brand new cycle where the fundamental definitions of what has value in our economy are being forcefully and permanently rearranged.
You know, this whole fictional scenario is a fascinating exercise in thinking about how complex systems work. By connecting geopolitics, technology, and our own psychology in the market, the report imagines one possible future. And it leaves us with a pretty provocative question. What are the invisible forces, the hidden cycles that are shaping our world right now?